Hello everyone. This morning I was going through my Instagram feed and I came across an ad by McDonald's for Hari Ramadan, which looked really enticing to me, and so I decided, why not? Let's try value McDonald's. So here I have my template. So I copy this, new sheet, rename it as McDonald's. Paste, paste. Right. First, we'll go to Wall Street Journal to get all the data. So this is how I will value, but there are many other ways to value it. You can go to MS Money as well. Click the search here. Look for McDonald's. McDonald's. Why is so many? Look at the US one. Right. So over here you can see the P/E ratio, EPS, market cap, and a few other data. So I'm gonna draw some of the data first. First I'm gonna take the trailing 12 months EPS. 7.54 PE 5-year high. I can actually find this on MSN Money. It's taking some time to load here. We'll skip that for now. P ratio trailing 12 months 26.19. We'll take that. That's a rather high price to earning ratios. Right. So we'll look for McDonald's. So for 5-year high price earning ratio, I can find it. Oops, that's my alarm. Sorry about that. Right. 5-year high PE ratio. Where can I find it? Price ratios. Under analysis, here's the current PE, 5-year high and 5-year low. So I'm gonna take this as well. Looks like it's currently it's 5-year high PE ratio. Cost PE is one of the way you can value the stock as well. Preferably we'll look for lower PE ratio companies, which indicates that it's cheaper, but it also might indicate that investors don't see a future in this company growing, don't see that this company is growing in the future. So that's why the low PE ratio. So we have to look at other metrics as well. Current PE. Right, we're gonna leave that blank first. So desired growth, usually I put 15%, depending on their dividend. So their dividend yield is about 2%, according to Wall Street Journal. So I'll deduct the dividend yield from there, so the desired growth of the stock itself will be 13%. Investment 5 years and margin of safety I'll put 20%. Right. It's safer to put 50%, but what I find is that if you put the margin of safety as 50%, you can't find any stocks that are actually in your buying range. So I rather put some of my money in company rather than all of it in cash. So that's why I put it as 20%, but that's a risk that I'm taking. I actually learned this investing technique from Hamish Harder, which is another YouTube channel, um, and he recommends a margin of safety of 50%. So yeah, just for your information. So now I'm gonna fill in all these four metrics: EPS, sales, free cash flow, and equity, based on the previous year's data. So you can find it over here. No, not compare. Where? I find it right here. Okay. Analyst ratings, most are saying buy. Okay, let's see. Look at the financials, income statement. Over here, you can get the sales or revenue for the past 5 years. So we'll just copy this over. Sales. Okay. Now we look for EPS. And we're gonna take the diluted EPS. Not sure why the diluted and not the basic, but that's what Hamish said in one of his videos, so I'll just follow it. EPS 4.82. Right. Now we're going to look for free cash flow, and you can find it over here under all sections, financials, cash flow. And go to the bottom, financing activities, free cash flow right here. We're going to take this number here. Equity. Equity, we can find it here under balance sheet. Go all the way to the bottom, liabilities and shareholders' equity. We're going to look at total equity. Oh, bracket means it's negative. How can you have negative equity? I'm not very sure what's going on. This doesn't make sense. I'm not really a financial. I'm not a financial advisor, so I'm also just a beginner in valuing stocks. So don't be too hard on me if I don't know anything. I'm not sure why it's negative equity here. Right. So ROIC, return on invested capital, we can find it. Key statistics, I think. management effectiveness. Return on invested capital. 5-year average is 16.52, but why is the current one not there? You might be able to find it here. Anyway, overview. Financials. Return on equity. I wonder why it's not here. Return on invested capital. ROIC. 23.19. So it's improving, I guess. Yeah, fiscal year end. So it's sort of like trailing 12 months fiscal year end in the last 1 year. So what we like to see in return on invested capital is in the last 1 year, it's better than in the last 5 years average. So that means their profit margins are increasing. They're getting better at making money out of the same invested capital. So that's good to see. However, I'm not sure why equity is low. Ideally, we like to see that all of these are in an increasing trend. Over here, we can see that EPS is increasing. However, sales are decreasing. And free cash flow is more or less remaining constant. And equity is also decreasing. So this is not a very good sign for a stock that you expect to grow. Not sure how much predicted growth we should put here. But, there's a calculator that we can use. Oh. Let's take out the calculator. So I've saved the link to the calculator here. So we'll just put it as slideshow and I can click it. Right. Okay, so this is how you calculate the past 5-year growth using this using this calculator. So we go to Wall Street Journal and go to, oh, actually we can't because total equity is negative. I'm not really sure how this works then. That might not calculate the past 5-year growth then. Debt equity ratio and current ratio. Oh yeah, we forgot about this. So we need to see if the company is in debt. So it's here, financial health under MSN Money. You can see the debt equity ratio. I'm not sure what's going on here. Why is it negative 1000? That doesn't look like a correct number. Debt to equity ratio is not shown here. Does it mean they don't have debt? Or they have too much debt? I should study more before I make this video. Anyway, it's just for fun, for any beginners who want to follow in how I value stocks as a very, very, very beginner. So I don't have the debt equity ratio or the current ratio. I don't know what that means. So this stock valuation will not be very reliable then. Okay, now I'm gonna put a number to the predicted growth. So we see that the EPS is growing quite nicely at about 18% in 1 year and 19% in 3 years. So 3 years I've put it from 2015, so 1, 2, 3. So from 2015 it has grew about 90%, from 2017 it has grew about 18%. And for sales, it has declined by about 7%. For free cash flow, it increased by 14% in the past year, but in the past 3 years it has decreased by 3%. So there's not really a growth in the free cash flow. Equity as well, actually something wrong with the formula. It shouldn't be 90+% of growth. You can see that it's obviously decreasing over here. It's because of the negative numbers. I'm not sure why there's negative equity. So if you know, please let me know in the comments below. Yeah, we all learn from each other, right? So for McDonald's, okay, we can just put a random number in it then. So let's say it's just 1% growth per year, 5% growth, 7% growth, 10% growth. We don't want to estimate too much growth for McDonald's because it's already so big and it's all over the world already, I think. Because McDonald's is from US, right? From the United States. And it's already reached across the globe. I live in Malaysia and there are so many branches here. But what I see is all the branches are quite um, they're always populated, so I think it's already reaching the peak of how much they can grow, and so I won't put such a high number. Out of all of this, I would say about McDonald's can still grow about 5% a year. Not sure, because equity is decreasing. I'm not sure what to say about this. Sales is actually going down for the past few years. But what I see is McDonald's is really good with their marketing. They are making use of social media to try and get their products out and try to attract people to go and eat at McDonald's. And um, their fried chicken is quite good as well. So I'm gonna estimate about 5% growth. That's just a random number that I put based on my gut feelings. So it's a lot of guesswork when you're doing this kind of valuing. You use your um, what you know about the company, what you see, and also um, previous growth. But actually, I wanted to calculate previous growth, but I don't think that's possible because of the negative equity. I not possible using the way that I know, but I'm sure there's some other way. Oh yes, we can look at this financials, right? So you can see the profit margin is increasing in the past few years. 15, 16, 2017, 2018, profit margin has been increasing. However, revenue and net income. Revenue has been decreasing, but net income has been increasing. So let's look at the balance sheet. Total assets has been fluctuating. Debt to assets has been increasing. That's not good. You don't want debt to be increasing, right? Cash flow, I'm not sure how to look at this. But here is the main one that I look at income statement. So let's look at the quarterly one, see how it's performing. Quarterly profit margin is decreasing, and net income is actually decreasing. So McDonald's is not actually growing that much anymore. It's plateauing, I would say. So let's change our growth to let's change it to 1%. It's not really growing. But why is EPS growing so well? Yes, the profit margin is growing. But it's remaining more or less constant here. Let's see here. McDonald's Corporation revenues fell 7.87% in fiscal year 2018 as compared to fiscal year 2017 to 21.03 billion. Net income grew 14.1%. So revenue dropped but net income grew. But you can't depend on net income to grow when your revenue is dropping. It means you're selling your things more and more expensive, and there's actually less and less people buying. But what I see in the stores are that a lot of people. I'm not sure. Let's just stick with 5%. It's a rather conservative number already. I'll, I'm contemplating between 1% and 5%. Right. So how much does McDonald's cost now? Our fair value is $115 per share. What did I do? $115 per share, and our buy price is about $92 per share. So let's look at how much the share is right now. It's good to value the stock and decide on what price you want before you actually look at the price, so you don't have a confirmation bias by doing that. So now it's $197.52 per share, which is really high compared to what we value it as. So I will probably not be putting my money into McDonald's. Wow, the share price has been going up. Yeah, it's not going down anytime. Right, I think that's all. So in conclusion, based on what I found, I'm not really going to be putting my money into McDonald's as it looks really expensive. I'm not sure if I evaluate it correctly, but yeah, so this is how I do it. This is for people who are just starting to invest and are wondering how to value your stocks. This is how I do it after watching some YouTube videos. It might be correct, it might not be correct, but at least you can put a number to it instead of just looking at the price, seeing that it's going up, so you're buying in. It's not like that. You should put a number to it and then only buy when it falls below the number that you have set. That's a better way to invest. Otherwise, you'll probably be gambling if you don't put any number to it. Right, that's all I have for you in this video. Thanks for watching.